Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Just talking more the same about yesterday. It's the same theme we've been discussing, which is this dichotomy. The stocks that are loved get more love. The stocks that are not loved get more hate. Aurora Cannabis up big this morning on news they are entering the U.S. market. We have earnings as well from Macy's, Best Buy, TTWO. That was a big one after the close yesterday. L Brands, and two guests on the docket today. First up at 8:35, we'll be joined by Scott Shellady, aka the Cow Guy, and then at 9, we'll be joined by Dmitry Pargamanik. He is the co-founder of Market Chameleon. They are an options research platform. So two guests, 8:35 and 9 o'clock. Let's bring Joel Elconin in now. Joel, give us a quick update on this overnight session.
I'm glad you had to pronounce that name and not me. Good morning, pre-market prep fans. Got a little red here in front of my screen. We're down 1750 at 29.51 and a quarter. Opened up right near the high close of the move. I mean, you can call the double top for now. Wednesday's high, 76 and a quarter. Thursday's high, 75.75. Had a nice little sell-off. 29.50 is your pre-market low, and just traded 10 handles off that. So for once, a little red here to start your trading day. Crude busted through 33 yesterday. We were talking about that level. Up 52 cents at 34.02, about just off that high of 34.48. Gold, call it a trading range, folks. 1700 to 1760 area. That's down $14 at 1738. Silver back under 18 by 28 cents at 17.75. Bitcoin futures can't clear 10,000, down $180 at 9,390. Triple D, you want to talk about it's really not good for stocks to make money, right?
Oh, yeah. This is the market. And this is such an interesting market. I don't think we're ever going to see a market like this again that we have right now. You have two separate markets here. One market is like 1999, where you've got Shopify's and Zooms and companies, buying growth at all costs, valuations thrown out the window. And then you have this other market that's trading like it's 2008, and we're in a financial crisis, and some companies are going out of business. So it's such an interesting market to see one aspect where you've got companies, just flying high, valuations thrown out the window. And then the other market, valuations all of a sudden matter. And, we have bankruptcy concerns and you have stocks making new lows. It's such a, it's just such a divergence between, the value in the growth stocks. And it continues. And what we keep seeing, as this market is confused, obviously the traders are confused. We whipsaw around. The fade trade has been the play. I mean, take two earnings last night. Full disclosure, I'm long TTWO, TTWO. Makes a new all-time high, has the run up into the earnings. Blows the numbers away. The stock goes, give us the numbers, Spencer. TTWO. They blew it away.
Yep, Q4 GAAP EPS of $1.07 versus an 89-cent estimate. GAAP sales of $760 million versus $539 million in the same quarter last year. Net bookings, let's see. Oh, actually, they gave some guidance too. They gave some guidance for the quarter and for the year. Net bookings, which is basically a metric that the video game industry uses. Net bookings for the year, they guided at just about $3 billion. And their GAAP EPS and sales guidance for this current quarter was also good. They actually gave guidance really far. They gave guidance for next year too, which you don't see too much of. They gave a lot of guidance yesterday. Net bookings were up, sales were up. They basically said all you could say. It's
so interesting, to see the stock rally, and it got up to, look at this after hours chart, it got up to $159 and change after hours, almost $160. And this is what we've been trying to tell you. If you're buying these rips on the companies with good earnings, you are getting punished. It's been the same story again and again and again. Walmart, was strong into the quarter. It was, ran up a little bit into the quarter, ran up ahead of the numbers that night. Reports good numbers. Stock opens up. What's it do by the end of the day? Closes red. Lowe's, good numbers, strong quarter, looking up pre-market, looking up and kissing up near the highs. What's it do? Sells off. It just run up too far. All the good news priced in. Take-Two, same story. You can look and, people are saying, well, the one game got delayed. They try to find a fundamental reason for it. But bottom line, it ran up significantly into the report. Everybody gets excited after hours on the blowout numbers. Whatever algo's buying is buying it up on the good numbers, and that proves to be wrong again. And then it starts to leak, and within an hour, it goes red. So it's the same story. It's like Groundhog Day around here. And the opposite story is happening with the weak stocks in the earnings. It seems like, when they sell off the stocks that disappoint, they end up buying them back. So again, what I'm telling you is you get these, significant moves on these earnings. They seem to be more often than not fades. Yes, in some cases you get some follow through, and maybe it's selective perception on my part, but I feel like this entire earnings season, the fade trade has made money.
Target yesterday, same thing, right? Opened up, sold off, right? For the entire session.
Yeah, same thing. It was, the numbers were fine at Target. I mean, yes, we talked about the revenues being light, but it was up. It's the same thing. It's like this market, and I joked last night, I'm like, this market doesn't like companies that make profits. It does, but it's also just a market that doesn't like extreme moves. Unless they're in these growth names, like the Shopify's and stuff, which is a completely different animal. So it's a very interesting market. And, what you're talking, doesn't apply to each stock. You have to take each case separately, because it doesn't matter what Shopify does right now. It doesn't matter, if the market goes up, the stock goes up. If the market goes down, the stock goes up. It's got the opposite of the Wells Fargo problem, where the Wells Fargo was just going down every day, no matter what the market was doing. Shopify just goes up every day. Valuations don't matter. It's got 1,000 on the mind. Traders think it's going to 1,000. I think it's going to 1,000. Does it make sense to be priced at 1,000? Hell no. But that's the market we're in. The storied stocks carry. And, and Take-Two had a story too, and it was moving up with the gaming. But again, this isn't like a super growth company like a Shopify or a Zoom. So it's priced differently. So unbelievable reversal on that stock, though.
This is a really interesting chart here. And I saw it like right away. I could have just turned on my trade station, and I looked, and I'm like, holy mackerel, look at this consolidation. The bots got a hold of this thing, right? You had that spike up, and then you came down. You made a low at 138.11, and then someone just said, no more selling in this stock at all. And they just made a stand here. They did. Come on, Dennis, look at that 15-minute.
Well, there's people that want to own this stock, Joel. I mean, this company's firing on all cylinders here right now. It's probably one of the best environments for Take-Two it's ever been. That's why I'm long it. So you see a pullback. There's money managers saying, I need to deploy capital. Here's a great company that's firing on all cylinders, and it's giving me a 7-point pullback on a great report. Yeah. So I'm not surprised that there's
I looked at that, and I tried to find a daily low that coincided with the pre-market low. And what's very interesting here is you didn't even get to your 2-day low, 136.34. So someone stepped up there, and they stepped up in a big way. They weren't lifting offers. They were just, I don't know. I don't know how closely you were looking at it. Was there like an iceberg or something out there?
Oh, it was trading crazy volume, Joel.
Yeah. I'm talking for the last, like even since after hours, and then what's about? Yeah.
Crazy volume. The thing was trading like AMD during the day, trading crazy volume, very active. So I'm sure there was multiple.
Also, weirdly enough, is they halted the stock, which you don't normally see, but they
Take-Two always does.
Take-Two always does?
Yeah, they do. Some companies just do it that way. Apple used to do it always, but then years ago, I don't know if they ever do it anymore. But Take-Two always does. I noticed that with Take-Two, they like to do that. Some companies, it's up to them. They want the time to digest the numbers. Don't want the whipsaw action. Well, they get the whipsaw action anyways. The thing, they had time to digest. They're like, this is a blowout number. And they bought the hell out of it. And they bought the hell out of it in the first candle, and then it just started leaking and leaking and leaking. And people are booking profits, and then they're booking losses. So I'm sticking with it. Sure. I think it's firing on all cylinders. I think it's a good company. It's in my long-term portfolio. I've had it in there for years. I've had Take-Two for a long time.
All right.
Well, maybe not years, but 20, probably close to a year. Take-Two. I own all these gaming stocks simply because
let's just do the real quick technical and move on this one because got some other stocks to cover. Trying to fill the gap here, folks. 143.83. That's your first target on the upside. See if we can get there. Then the close is 146.84, and after that kind of drop, I'm sure people would like to see 149.28. That was your all-time high. Your all-time closing high from yesterday, 146.84. Just a quick look at Activision. They already had their earnings, correct, Triple D?
Yeah, they all have. ATVI did, EA did. So you're going to see muted activity when the ones that have already reported.
Activision better get out of here. Better get out of this area right now. Because I know it's a long consolidation gap and kind of a stall right here.
A little bit.
Yeah, 67. I mean, you're still a ways from that. I'm not, I wouldn't run for the hills right here, but you better hold 67. That was the low on earnings day, man, right near, not even really a gap right there because that was real close, 66, 89, 67. So I really like the 67 number on the upside. And someone's trying to work out of a piece, at least over the last 2 days, at 74.5. So keep it right there, 444 and then 454. And then what's the other big gun in this one? EA?
EA, the three big ones, yep.
Yep, right back near all-time high, pulling back a little bit. But no, that's not an all-time high. The all-time high was, that's holding in there pretty good. Use yesterday's high, 121.76 is resistance.
Jump over to, and we have had a lot of stocks report here this morning. Let's go to Best Buy because this stock reported okay numbers, but it's getting hit.
Yeah, okay. Basically not as bad as the analysts expected. That's the takeaway. The numbers weren't great, but the expectations were worse. So earnings per share, 67 cents on an adjusted basis versus a 61 versus a 60-cent estimate. Right. Thank you. Revenue, $8.56 billion. Same-store sales down 5.3%. Same-store sales were estimated to fall 10%. So I guess, better than expected, like I said. And the revenue, same-store. Net income fell, but it was expected to fall more. So just not as bad as the analysts thought it would be.
It's been a huge comeback for Best Buy. I mean, again, same story. Companies just, people are booking profits here on the decent reports. $50. This thing was $48 back in the middle of March. Here we are 2 months later, and the stock is up almost 100%. When it got up to $90, $87.69, up 85%. So it's pulling back here this morning. I think you have support down in the mid-70s. So if this was to get significantly ugly, I think you do have support. You might even see it coming before then. We broke out from 80. You'd say, 80 is maybe a reference point here. If we can get back above 80, it starts to get interesting again. I'd go along with that. This thing get back up over 80, it starts to get interesting again. From a fundamental standpoint, though, it's tough. I mean, the stores were closed for a long time. We know the next quarter is going to be a disaster. They're going to come back, but we're in a recession, and there's a lot of people who don't have as much money. Are they buying, are they buying computer products? What are they buying? Are they buying electronics? I don't know. I think there's less people probably buying electronics, and people like this shopping online. They like, hey, this is pretty easy for me to buy Amazon. None of that is good for Best Buy in the long run. But we've been talking about, Amazon eating Best Buy's lunch, and they figured out a way around it. So the only problem is people are staying home more now. So I tend to not like this stock.
Better hold on 78.50 here. This is kind of a sleepy chart. You came down hard off the number. 78.50 held up for a couple brackets here, but below 70, this kind of feels like it has some more work to do on the downside. I'd use 78.50 as that area of support. 4-day low may come into play in this one, 75.85. But as long as you hold that 78.50, it looks okay. It's trying to get away from there, but not bolting out of there like to take two. Your 4-day close, 78.61. If you bolt and you get rally in this one, you want to look for a gap fill. Get your offers out there about 80.70, 80.75. That represents the low from yesterday.
Let's talk the Chinese stocks because we had a headline break during the day yesterday, and it got ugly for all the Chinese stocks. Give us the headlines from yesterday. There's more talk on this morning. Somebody was just on CNBC talking about it as well. What's up?
Or actually, there's a headline from like 10 minutes ago. So the headline from 10 minutes ago
Yeah.
is that Baidu is considering leaving the NASDAQ, delisting from the NASDAQ in order to boost
On their own.
On their own. And the reason they would do that is because of the headline yesterday, which is the Senate passed a new bill basically targeting China, meant for all foreign companies, but targeting China specifically. And it said that in order for a company to list on a U.S. exchange, they have to prove that they're not being run by the state government, and also they must the U.S. must be able to audit 3 continuous years of financial statements, and if they can't comply with either of those regulations, then they're going to get kicked off the exchange.
They don't want another Luckin Coffee.
Right, exactly.
We don't want another Luckin Coffee. Alibaba, people are asking me multiple times about Alibaba. I'm still long it. It's one of the only Chinese companies that I own. I do own a couple ETFs that have some emerging markets, but direct ownership, it's one of the only ones I own. I think it's best in breed over there. That being said, it's a scary headline. I'm not surprised it's down here again this morning, down $3.63. Josh Brown was making a good point on CNBC last night, and he was saying that he believes Alibaba and a lot of the big ones are already audited over here. So maybe they already are complying with some of this stuff. I don't know that stuff. I haven't looked into it. But you know, I would think there's going to be I don't think there's a scenario where we're going to see Alibaba get delisted, but you know, you never know. And if
look at some of these smaller names, these smaller stocks.
Yeah, like there's more concern there for sure.
Yeah,
like this YY is getting the beats.
Yep. HUYA also down this morning.
I think it had earnings, didn't it?
YY had earnings, I believe.
Both of them did. HUYA and
okay.
Y. I think HUYA did too.
Okay.
I feel like it did. I may be wrong.
IQ, basically, what was it?
China stock's getting rocked a little bit here this morning.
Yeah, it was all those hot stocks from like the summer of 2017.
It's interesting timing on this too. I mean, don't they have better things to do right now than, you know, we're worried about a Luckin Coffee, but let's be worried about a lot. There's bigger worries out here right now than, you know, worrying about, you know, delisting every Chinese stock just because they might potentially be another Luckin Coffee. So I'm not a fan of this move, not the timing of it anyways. I don't want to see another Luckin Coffee either, but I also don't believe that every Chinese company is crooked. So, which is kind of what they're implying to a certain extent. So they want to make sure they're not crooked.
Just noise.
I think the dips get bought in some of these, like an Alibaba, if it gets ugly and gets down like $200. If they're talking about delisting, like Baidu's going to do it on their own, I wouldn't want to own that because I don't want to have to go bother trying to, you know, trade my stock over in China or trying to get out of it over there.
I feel like they would just go OTC. You could just buy them OTC.
Well, you go OTC too, but it becomes a pain in the butt. I mean, let's talk OTC for a second here. I had some equity in this stock, and I don't even remember what it was. It's like a legacy position from years and years ago in my long-term portfolio. And for whatever reason, the company restructured and I got a bond out of it. And I was trying to sell this bond on this small cap company. And it's like, I can't believe how inefficient the bond market is. I call my broker, they can't find a quote. It takes them 2 days to go and find, you know, where there's a buyer for this. And you know, you're getting ripped right off when they got to go hunt down, you know, where there's a buyer. I mean, this is how inefficient the bond market is. So when you start going OTC, even on stocks, it can get a mess. It can be a mess too. I mean, not maybe on something like Baidu if it goes OTC because there'll still be some volume, but it's when you start going off exchange, it becomes very interesting to try to get out of stocks. And that's always a concern. When you get a delisting, I never like to own a stock that's delisted because I've been through the process before. And it's not that fun to have your broker hunt it down. And it's all like not transparent. So you don't even know. Like the guy, okay, so I ended up getting out of this bond at $88 or whatever. And I don't know where the price is. I mean, I know it'll last because the thing trades like by appointment only. So maybe the thing's worth like 93 and they're taking me for 5 points. There's no way to know any of that. The transparency in the bond market, it's unbelievable the equities have come this far and there's no transparency in the bond market. And I know there's companies out there that have been working on this issue, but you know, that's just my little rant here against OTC and the bond market in itself. I know Baidu isn't a bond, but it just made me think of it. So here we are. Baidu's down a couple bucks here. They're talking about delisting. I don't know what to say. I think you got support below at $100. You know, that's where it broke out from.
This thing's been a dog. It's been
a real dog.
Yeah. So I mean, this bad day yesterday, foul through today. I mean, they popped to 120. Probably made a lot of people happy. What 2-day high 120.85. So. I don't know. It's a dog. If you want to try and buy it on a pullback
not
here,
best of breed.
Yeah. Yep. Yep.
I agree with Kramer. He's always had Baba as best of breed over there out of all the Chinese stocks. I'm the same way. I mean, Alibaba it's trying to make a new all-time high. I mean, look where we are. You know, you're not that far away from it. The all-time highs at 231. We got up to 220 before this headline hit it yesterday. I think if I'm buying any Chinese stock on the dip, it would be Alibaba, but I already own it. So I'm probably not going to buy more. But it's a tough gig when you're buying these small Chinese companies. We know it's not transparent. We know there's some shenanigans that could potentially happen. So do I get what they're doing about? Yeah, the timing though could just be better. So lots of small Chinese companies that just aren't transparent. And whenever you're buying some of these smaller Chinese companies that have different accounting principles, you risk another Luckin Coffee for sure. Are they all Luckin Coffees? No, some of these are very legitimate companies, but it's tough. I mean, we thought Luckin Coffee was a legitimate company too 2 months ago before all this stuff happened.
That popped to 349 yesterday.
People jumping in. Oh yeah, it's going to come back. No, it's going to delist probably here. So I don't think it's coming back. I know people are buying this at $2, thinking eventually it's going to be back to $20 or $30. I think you're wrong.
What about any more earnings there? Suspense?
A lot more.
Okay.
Let's go to
let's go to Expedia. Can we go to Expedia first? Because this is the opposite story. Opposite story of Take-Two.
All right, the numbers here from Expedia, Q1 EPS, a loss of $1.83 per share versus a loss. The estimate was that they would lose $1.04, so they lost way more than the estimate on that number. Sales $2.2 billion versus a $2.3 billion estimate, so they missed that number as well. And look at the stock. Wouldn't you know it?
Of course, it's trading higher on a disaster report. It was trading down. And again, the CNBC influence is just unbelievable. Josh Brown, again, they had him on there, and he talked it up. And he said, I don't have a position in it, but I want to have a position. It was kind of the same story. He did that on stock a couple weeks ago, and he turned the stock right around. It was trading down a little bit on the report, and he started talking bullish, and within 10 seconds, the algos are just like all over CNBC
Josh Brown
commentary.
Algo.
Yeah, Josh Brown, you're listening. Man, they got an algos following you there because he started talking and he wasn't saying anything wrong. He was just talking and he liked the stock. It turned around on a dime and started printing it was at 79 or like it might have even been 78 and change. It was down $1 and it started going within a second. It was up over 80, 81, 82, and they're ripping this thing higher. And it's not coincidence, because there is just people that are trading off of CNBC. But I think there's algos trading off of CNBC too, because that move was wicked fast. I mean, maybe there's some really fast people out there that are quicker on the keyboard than me. Yes, I got sore eyes. I'm 44 or 43 years old here now, and Joel's 80, so he's a little bit slow too. But there's some young bucks that 79. Are fast on the computer. So maybe it's all human, but it felt
it's
algo.
Not human.
It felt algo right off of Josh.
Human.
That's an impressive algorithm to be able to listen to commentary on CNBC and decide whether it's bullish or bearish or not, and then make a trade on that. I mean, whoever's writing that algo, that is an efficient algo to be able. It's one thing to read, computer generated reading, and a headline. It's another thing to listen to commentary and then and make the trade on it. But it popped, and it popped significantly. And people say I'm nuts, or some people won't believe that Josh Brown moved the stock up that much. He did, and I don't even think Josh probably knows how much he moves stocks, but. Yeah, there is people.
It might not be as hard of algorithm to program as you think, because a majority of these guys talk bullish, right? I mean, not too often.
Unless you're Dan Nathan.
Unless you're Dan Nathan, right? Oh, Spinner's going to
Dan Nathan is consistently bearish.
Okay.
You always know when they ask Dan Nathan's opinion, you can predict it. He's going to hate it. Me and Spinner were talking last night on Twitter, and I was like, has Dan Nathan ever been bullish on anything? And he said Microsoft. So I guess Dan Nathan's like the eternal bear up there. You got to give him props. He's consistent, but he is bearish, man.
I think Spinner may be an algorithm too, because he knows he follows everybody and knows everything.
Too. He's part algo.
He's part algo, or else he's running a really good one.
We're talking in the pre-market Benzinga chat. Spinner has been one of our long-term participants in there, and he often gives some great commentary. But he's all over. He knows all over every story too.
I know
so he's
everything.
Part algo.
83.64. That was your high on March 11th. And where did we get to? We got to 83.67. Oh, no, that was part of
But is it
yesterday.
not ridiculous? Let's just stop for a second and ignore the technicals, and then we can finish this. Is it not absolutely ridiculous that a company reports that crappy of numbers, gross bookings down 39% year over year, miss massively on the bottom line, and we know that quarter was supposed to be the okay one. It had, we're talking 2.5 months of okay normal activity. It was the last 2 weeks that were going to be garbage of it. So the next quarter coming in is going to be bad. So, and nobody wants to give any guidance on that. We know it's going to be a disaster. But you look and you say, hey, Uber sales were down 90%, but they buy the hell out of that stock. So this stock's on sales only down 37% or whatever for the quarter. It's like, sounds pretty good. So I guess, that's what it is. It's just they're pricing in so much. They've priced in a lot of bad news. But I look at where Expedia is now. I look at where it was, and I think it's not discounted enough. But I've been wrong for a while. Like, I thought Uber and Lyft would get sold. They haven't. They still like these growth companies, so-called growth companies that aren't growing anymore. But they've got the Momo name to them, and they were growing before this COVID hit. And investors are speculating that we're going to get past the virus and they're going to grow again. And maybe they're right, but I cannot bring myself to invest in any of these companies.
Who was the guy that we had on
sales are down 90%.
to track the audio on conference calls?
That was Evan Schneidman from Pratt.
Oh yeah, I should have known that. Yeah.
Schneidman.
You call him Schneidman, I call him Schneidman.
I'm sure one of those is correct.
Yes. Oh yeah. But I think
you say potato, I say potato.
Okay, let's keep an eye on. You hit 83.67 after hours. It's probably right when Josh was talking, right, Dennis?
Yeah. I was watching the stock I had on my screen because it had just reported, and then they're bringing live commentary in like a minute after it reports.
There you go.
And it traded down in the headline number, and then Josh started talking bullish. And I'm telling you, the second he starts talking bullish, actually, it's a couple seconds before he starts talking bullish because these people have a faster CNBC feed than I do. He started seeing it rip. So impressive.
Keep an eye on that. I'd like, it hit that during the JB ran 83.67, and that's also a daily high, 83.64 on March 11th. We had them on a while ago, but I don't think CNBC lets them come on anymore.
We've had Josh on a few times, but they get these exclusives on us, and then we can't get them back on. So they battle us. When we were smaller potato, they didn't care as much. Now that we broke 1,000 concurrent listeners, now they care all of a sudden.
I mean, they only have like 7,000.
I don't know what the concurrent listeners on CNBC, but it's not as high as you think. I'll tell you that much.
And I have a conspiracy theory. I have a conspiracy theory. The people that give us dislikes every day, I think that they're the producers of the show that gives us the dislikes.
The producers of our show, Spencer Israel.
No.
It's me, guys.
Spencer, stop disliking our show.
It's me.
Just because I talk over you doesn't mean you have to dislike the show.
Can we move on to BJ's here?
Maybe it's Joel. I talk over Joel all the time.
Dennis, you're real polarized. A lot of people like you, and then a lot of people don't like you.
I know. Everybody's got an opinion on me for sure.
Yeah.
There's a love-hate out there for me. That's okay.
Yeah, it depends. Sometimes they throw the Canadian stuff.
Joel has a love-hate for me too.
Move on. Earnings.
All right, I want to do BJ's here. This one's interesting. So the numbers from BJ's yesterday. This morning. Q1 adjusted EPS 69 cents versus a 34-cent estimate. Sales of 3.79 versus $3.3 billion. So a very nice sales and, more importantly, an earnings beat for BJ's. Haven't seen too many earnings beats this earnings season. And that's it. That's what I got for you.
It's good numbers. Stock trading up on it. What did it do on the report on the print here, Joel? I haven't been looking at this one at all.
It went down a little bit.
It went down on those numbers originally.
Not well.
What the hell selling it on those numbers?
No, maybe not. I'm looking. It had a big old bar and right on the print, and it really $29. So it really didn't go that far. This one was just the breakout guys getting involved, and they were looking at 29.50, right? 29.53, yesterday's high, 29.40, the 2-day high. Boom, we're lifting. We're getting this thing over 29.50. We're going 30 bid, 30 and a quarter bid, putting stock out at a half, pretty much. No, not even a half, probably half, 3/4 put a bigger chunk out at 31, and then it turned at 31.17. So missed the breakout on that one. Pre-market high 31.17. And I don't know why this thing this was a market day. Oh, look at the high on March 19th.
Yeah, that's going to be your challenge right there. It's going to go up. It could kiss that. That's where your major resistance point is going to be. And remember, what we've been talking about is they've actually sold some companies on good earnings here. So caution to the buyer. I don't want to buy anything up 6-7%, especially when it's going into that candle. Could it break out? Yeah, I might not short. I hate shorting stocks when they're breaking out too, but I don't want to chase anything. And you're chasing it here if you're buying it up $1.50 or $2 this morning. So it is a good report. It deserves to be up, but we've seen in this case lots of companies that deserve to be higher and then they go down. So I'd be careful. You probably got a few people that got it really excited. You know what that candle is, Joel. That's the Costco candle. That's the hoarding candle. You could call that, that was when everybody's got to go to the grocery store and buy everything, ahead of time here because we're never going to get out of our house again. That's a pre-lockdown candle. Or, right around that time when they were buying the hell out of, General Mills and Campbell's Soup and everything that they could possibly buy. That's what that BJ is. So that was the run up there at the same time. It's Walmart's and Costco's and all of them topped out. Kroger, same story, I believe. Yeah, if you look Kroger, same exact time. So you get back up near those points, there's people who are got caught, and those become resistance.
We just got jobless claims for last week. 2.438 million new claims, which is just above where the estimate was at, 2.4 million. So steady, consistent week over week decline, but still at absurdly high levels as far as jobless claims are concerned.
Not all that exciting.
Yeah, market really did move.
I didn't even notice. I didn't notice the movement at all.
I didn't even have a chance. Like Dennis, go wide, but
Where's that VIX? It's coming in 28. Still 28. Doesn't feel like 28. Feels like 20, doesn't it? Feel lower. How's Virtue Financial doing? Our VIX play coming down the mountain. I'm gonna get my Virtue Financial back here. I sold it too soon on the way up. I think I sold it like 22 and 23.5. It's below where I sold it, I think now. At least some of it I sold up there. I want to get this thing back at 20. Virtue Financial, come to Papa, $20. $20.
All right, keep an eye on that. Well, we're leaking a little bit here. Down 16 handles, 28.52.50. Had the the closing high for the rebound yesterday, 29.68. I don't know. I think we're gonna have I don't know. Can we slow down? Can we have a little holiday trading maybe today and tomorrow, Dennis? Memorial Day on Monday. I don't know. Memorial Day rally. Who knows?
I think we could. I mean, we feel like we're slowing
we always
down.
Rally. Yeah,
we are slowing down.
Why do I have to call it a Memorial Day rally? I mean, we rally every day.
This market has no memory. One day they love it, the market, the next day they don't like it. We've saw it whipsaw. We're at the top of the trading range, though, so they've liked it for the last few days. I do think, I said it before, I think we're going to break above 3,000 here.
I don't think so.
I think we got to do it just to stick our head above it, just to sucker in more people long and to, squeeze out the shorts. We got more of a squeeze coming.
Lunch bet?
Yeah, I'll do a lunch bet.
Oh my God, when was our last lunch bet?
Because we're
down 15. I'm giving up the edge. I'm not going to do it.
What are you talking about?
Up the edge. No.
Why? How are you giving up the edge?
Because I'm giving up 15. No, I'm not doing it. I've lost too many lunches.
How do you know you're giving up the edge? I didn't even propose anything to you.
Okay, what do you propose? No. No, go ahead.
We're 50 points away, 43 points away from. So I would say, I don't know. I'll give you I'll just take 5 points off of this price. So $4. Well, that's tough too because we could get down to 291.95. I got to go wider than that. Maybe there isn't a bet.
While you figure out what you're going to offer,
if it trades 28.65 today, then I'll go 15 points each way or 50 points each way. If we trade 28.65. Ponder that one.
So bet to be determined. Yeah.
Okay, fine. While you determine that, I'm going to bring in our guest here, Scott Shellady, a.k.a. the Cow Guy, joining us now on Pre-Market Prep. Scott, good morning.
Good morning. How are you?
There he is. The sharp-dressed man.
Hanging in there.
It's my pajamas. I still haven't changed.
Yeah, he hasn't changed. He wakes up like that, just ready to ride.
You should see the footies.
He is the best dressed. He's the best dressed man I've seen anywhere. That is an awesome outfit. What's going on?
Lots. I mean, you guys have got a great show. You cover a lot of stuff, but I mean, who would have thought we'd be in this situation even 3 months ago? It's been pretty mind-boggling.
What do you make of this market? I mean, I can't, you've got two separate markets happening here. You have like some stocks trading like it's 1999. You got Shopify and Zooms, valuations, throw those out the window. We just want growth at any cost. And then you have other stocks like it's 2008. We have some companies teetering on bankruptcy. So it's like the best of 2008 and the best of 1999. What are your thoughts on this market? So
you're right. I think we need more time, because another thing I'm still perplexed is all these decent real estate numbers that are coming through for the month of April too. So I'm just still not quite sure that a lot of that damage, this is not a gash. This is a stab wound, and nobody knows how deep it is. And so I think that the market, and I coined the phrase back in the day, is trading on hopium. I really do. I mean, it's so nice to get outside. I'm in Scottsdale, Arizona, going to the restaurants. That's just such a buoyant feeling. But, we don't have the economic figures really to come in and support that yet. So either the market's going to have to come down to where a lot of these valuations are, these 2008 levels, or we're going to have to see things get better faster and have them kind of come up to where the market is. Look, 25% of restaurants are not coming back. 1/3 of small businesses are not coming back. We haven't begun to see the bankruptcies really come through. Rolls-Royce let another 9,000 people go yesterday. I mean, the drip, drip, drip of negative news is going to continue. And I'm sorry to say, I'm a very big optimist, but I just can't see a slow rolling recovery being a V-shaped recovery. A slow rolling recovery a slow rolling open is going to be a slow rolling recovery. And so that's what I think we're in for. And you know what? Hey, I've got a British passport. I spent 16 of the last 32 years in England. Yesterday, or I think the day before, one of the last two, you saw Britain, float their first negatively priced bond. That could be something coming this way too. So we've got a lot on our plate, and I'm just going to try to stay a little bit calm and not get too excited too early, because there still is a lot of negativity out there.
So as we sort of head out of earnings season here, Scott, and I guess there's not going to be as much in the way of fundamental data for a while here. How does that sort of factor into things?
Well, I mean, it's like we're in a dark closet and we want people to turn the lights on, and what they're doing is feeding us food and water under the door, and we can't see where it is. I mean, That's what we are. We're searching around for a lot of these folks, or these companies aren't going to give us any guidance, and they're not going to talk about what's going forward because they don't know. But I can't, 40% of the job losses are for people under 40 grand a year. I mean, I have all the stats, and it's just not good. And to get over those things, it's going to take time. And, when you want to talk about another stimulus, I said this the other day, and people don't realize it. I mean, we're talking trillions of dollars. And if your listeners out there know what a trillion is, and we all think we do, if you have 1 million seconds, that equals 11.5 days back to back, 1 million seconds back to back. 1 billion seconds is 31.75 years, almost 32 years back to back. 1 trillion seconds is almost 32,000 years back to back. So we've got a $3 trillion rescue package already. We're talking about another $3 trillion. I mean, that's trouble on the horizon, if you ask me. And again, with what, Britain and the negatively priced debt, these valuations. I mean, I know there are some things that are, if you were in the NASDAQ, you're loving life right now. But I still say that we've got something. It's not that easy. If it was that easy, everybody would be doing this job. That's the bottom line. So we've got some bruises to still.
So what do you tell people as far as how to approach this market that on the one hand is so disconnected, and on the other, I don't know.
Well, I like to comment that cash is an asset class. Okay, that can be something that people can park their money in for the short term. And the leaders that have brought us back, I'm still skeptical. I think that the broad market is still going to be bruised, and you have to be. Maybe this is one of those. We've all talked about this. I've been doing this job for 32 years. Sometimes the trading guides give you one last chance to kind of get out, park your money, and take a breather here. And I think this could be it. I'm not a massive, I don't think that we're going to see, Armageddon. I just know that these bruises don't heal as quickly as everybody would like them to. I know that we've got an election coming up, so there's going to be a lot playing into it that way politically. However, go down the list of people and the bankruptcies and all the jobs. I mean, how quickly can you get over 36 million people losing their jobs in 8 weeks? I mean, that's, you don't just, I don't, maybe I told you guys this the last time I was on. When you were a kid and you shut the gym lights off going home at night, they went off immediately. You come in the next morning, Saturday morning for basketball practice, and flip them on. It takes them 5-10 minutes to warm up and get going and light the gym up. That's the economy. You just can't flip it off and then flip it back on again and expect the same action. So I would say if you've gotten back to close to where you were, this is a good time to take stock and kind of settle down and bring your chips in close to your chest. And if not, I mean, depending on what your time horizon is and where you're looking to retire, you got to do some serious dancing here because it's still going to be very, very bumpy. No
so,
doubt.
do you think we'll know more by when, end of the next quarter or
September? I think you'll know a lot, and that's why I sometimes want to hit myself in the face with a hammer because I don't want to see the government give out another $3 trillion very quickly. Because does anybody have an idea what the first $3 trillion has done so far yet? I mean, we don't even know where the bad places to put the money is yet. I mean, we have to wait for some of this stuff to trickle through. And so I would like them to slow down. I know everybody wants to spend money as quickly as possible, and small businesses really, really do need it. And there's too much absurdity out there that's going to lend people to have a difficult time. I mean, just think about these draconian rules. You're allowed, that's a whole nother story. You're allowed to open your restaurant now, and you're allowed to pay 100% of your overheads, but you're only allowed to have 25 to 50% of your revenues. I mean, who's nodding at that around the table? The same for retail. So, I mean, where is this great recovery going to come back in when you're not allowed to have 100% of your revenues?
Yeah.
And even if every governor said today, everything's fine, 33% of Americans have said they would not come out of their houses. They don't trust it. So you've lost 33% of your customers right there anyway.
I'm one of those.
So where is this great economic engine going to be? How's it going to be driven? Where's the consumer confidence? Where's the consumer spending going to be? That's why I just say everything I look at makes me nervous, but at the same time, I'm happy that I can go down the road tonight for a pint of lager.
Dennis, he said Americans. You don't count in that statistic.
Oh, okay.
We're on with Scott Shellady. He's also known as the Cow Guy. He's the head of U.S. OTC producers at Marex Solutions. Scott, what about commodities here? Oil, gold. Oil, June's went off the board yesterday, and just steadily trickling higher here. And gold is resilient.
Yeah, I think the interesting one lately was really silver, kind of try to play catch up. You're right. Gold's the two things I was taught as a young trader: buy gold in times of inflation. That's not happening, or times of Armageddon. As crazy as I feel like it is right now, it's not Armageddon, but there's a lot of money. Something changed over the last 20 years. A lot of people around the world have technologically been able to connect to our markets, and a lot of times they have that ability to express their feelings in the U.S. in some limited capacity. And one of the products that they do that in is gold. Another one, as of late, has been Bitcoin. Bitcoin sometimes acts really crazy to me, but a lot of times that's just a global group of traders that are expressing a view of the U.S. and the few things that they can trade. So I think gold's getting a little bit of a bump from that. It's a place to maybe park because people are worried about what might be happening as of late. Oil, the two things that I really watch are oil, that's a huge one, and the 10-year yield. And the 10-year yield is just not doing anything for me to make me feel like this is going to be great. And again, I think it was very significant about the negatively priced bonds out of London yesterday. That's just another thing that just gives me another pause for concern. You've got an oil market. I mean, look, we're all happy about oil at $33 a barrel. Look at ourselves in the mirror. I mean, how are we happy about that? That's a disaster for our drillers and all the people in the oil industry here in the States. And at the same time, we have a 10-year yield below 0.75%. So those things need to really start taking off for me to start to think, okay, here we go. We're on something good here, because what's going to happen if with the next downturn or more and more bad news? The bad news is weighing heavy. So I would say keep an eye on oil and keep an eye on the 10-year. Those are going to be the leaders, I think, that are going to make you feel like you can dip your toe back in the water when you want to start buying back these asset classes and equities.
All right, Scott Shellady, as I mentioned, he's the head of U.S. OTC producers at Marex Solutions, also known as the Cow Guy. Scott, thanks for the time again today, and stay safe out there.
All righty, guys. Have a good weekend.
Thank you. Climbing back the wall of worry here. Can't keep the market down 5 handles only.
Buy the dip, man.
Dennis, you're getting a little rally here.
Just buy the dip. Why? Why not? That's what do we do. We just buy the dip. Buy the dip. Buy the dip. Buy the dip.
Are you going to sell the rip in Aurora Cannabis this morning, Dennis?
Yeah, let's talk about that.
This was news from after the close yesterday. Aurora announcing that they have acquired this company Reliva for $40 million, and by way of that, they are entering the U.S. cannabis market.
They got to do something. I mean, they're trying to, do something here. They know the business is struggling, and they're trying to find other ways to generate revenue. They know it's been tough in Canada, too much competition in Canada, and it's obviously, it's been not a good run for them. So, it's a smart move trying to get in and get into some other markets. Is it going to save the company? I don't think so. So, I'd be a seller of the rally.
Where did they get the money to do this?
Well, I don't know. That's a good question too. I'm sure they're going to do some type of raise, or they've got maybe an investor to do it, or maybe they're using stock. I'm not sure. I haven't looked at the details of that.
Okay.
I'd say you got major resistance up there at that double top, 1968, 1925. You're a long ways away from there. So if you're shorting it here, it's kind of like, well, where's my out? Like really, you could still say it could come back in. It could go to 17, 18 bucks, 19 bucks. I mean, so it's a tough trade. But I think any pop I'm still going to say is to be sold. You're getting a beautiful pop in it. I'd ring the register. Just me.
17. Well, first of all, halfway back of this move from 1968 to 12.11 puts you right at $16. So holding 16, I think it's a good indication that this may go up and test the high close of the rebound at 17.10. So those are levels. 19 and a quarter, 1968 palms out at that level if it gets up there. Where are we at? How high? We've already backed off. Oh, look at that. I said 1710. I didn't even look at the pre-market high, and they got real excited in this one. They took it to 1785. So you're $1.60 off that high. I don't know. I think you find some sellers ahead. I don't think you see that 17.
I don't think so either. I think it's a nice headline. Yes, they're expanding into the markets. I just think, I listen to Gordon Johnson. He does his analysis. He knows his stuff. And he's said this is a zero. That's what I love about Gordon. He doesn't sugarcoat anything. He thinks it's a zero. He said that a long time ago. So if you're listening to Gordon, you would have sold a lot higher than this. I mean, when did Gordon Johnson come on with that zero price target on this thing? Let's give Gordon Johnson some props.
I can't remember.
Can we look back in the pro? Can we see that?
Yeah. Give me
when
a
second. When he downgraded to sell and said, that's it.
Find it here.
Yeah. It's going to be hard because of the reverse split, right?
Well, either way, we can still look at it in
the
chart.
You're right.
So we can look at it.
Yep.
Way higher.
Have to track. Yeah. I'll have to track them down. After that, when Spencer's
I'm trying to find it too.
Yeah. We'll let you guys
He's been spot on this. Downgrade. I can't find it here either. Because he's an independent now too, right?
Exactly. That's what's making it tricky.
Yeah, because he used to be. Where was he? Gordon Haskett before? Who was he with before he went independent?
No, he was
began with an A.
I can easily say it was probably in 2019 that he did that. So I think it was probably in the middle of 2019.
Axiom.
Right.
Yeah, it was with Axiom. Yeah.
Okay, so it was late last year, but when did he first make the call? I think
he's hated that stock forever.
I think he first made the call. I don't know. Sorry, I don't have it.
Okay. Anyways, it's 2019, and I think it's in the middle of 2019 when the stock was $80. It's $16. So even if it was at $40, we can safely say he's been right. So until he comes out and says, no, they've turned it around and I'm changing it from a 0 to a price target of 50, that's, when I'm going to get. So he knows more about this company than I do. He does his homework. I know Gordon Johnson does a lot of homework, and I know he knows the fundamental cases here. And if he says it's a 0, I don't want to touch it.
Tough question for you, Dennis, here. Can you explain why anyone would buy negative yielding bonds?
No. Next. They're not scared that, they're that scared for the capital markets that they think their money's, got to be safe over here. I mean, I guess it's a case for Bitcoin, right? If we start taking, negative, rates, maybe that's a case for, storing gold, storing silver, storing Bitcoin alternative. If we're going rates and you want to, you're too scared to hold the market. So you're obviously just too scared to hold any other assets. And that's why I'd buy a negative rate bond, but they make no sense to me. Next. The answer is no. I can't explain it.
How about
I would never buy a negative rate bond myself. Never.
How about limited brands? One of the dogs that this is one that Lisa.
You still got this?
Yeah.
Chill. Anyways, This is Lisa pick, right?
Yep.
We're throwing Lisa under the bus here. It's stopped going down. I want to say something good. $10 is huge support. Could you get a little squeeze and could you get some life in this thing? You could. Do I think it's turning the corner and going to go back to 25 or 30? No. So I could see it as a trade, but you're kind of in the middle of nowhere and better places for my money.
Yeah. I mean, until we get over $13, there's nothing doing on the upside here. Your last 3-day highs, 1290, 1311, 1287. You closed at 1222, a couple closes, the 12 handle. Not looking good. I think we talked about this yesterday. Didn't get it down to $10. Triple bottom there between 10.03, 10 1/4. Nothing fancy to talk about.
Does anybody know what's happened with Enphase? We were searching around a little bit here this morning. It got hit pretty hard yesterday.
Spinner probably knows.
ENPH, it's getting hit here again. It was under 60 a little while ago in the pre-market. Trade down the 59 handle. It's bounced back here. I don't see a headline on this. I do have a trading position. I got a pair on between SEDG and ENPH. That's just a day trade pair. But I haven't seen a headline on this one. Is there something like it's got to be maybe in the map from something to do with solar?
I don't know.
Is this a solar trend or is it just Enphase this morning?
I don't know. I don't see a lot of other solar stocks getting the beats here though.
Yeah.
So
No, me neither.
So yeah, I just see Enphase really getting picked on here, and I'm just curious because it was breaking out yesterday. The stock actually made a new all-time high, and then it sold off pretty hard from those highs, and it's continued. Maybe it's just scared profit taking from the highs yesterday, but it's so interesting. You see a stock making a new all-time high, and then peel off $10. You're talking about stock peeling off like 15% from the all-time high it made 2 days ago. So interesting. ENPH, I haven't seen a headline.
All right, S&Ps did climb into the 2960 handle. We're only down 8 1/4 now. Where do we get to on that little pop up here? We did get to 2964. So I'll still go with that, Dennis. If we get to 2965,
he wants to make the bet. He's like he can't help himself. If it
gets to listen,
got to make a bet.
If it gets to 2965 at any time today, you get 30-15, and then I get 29.
If then scenarios I'm not into. I'm into straight up bets. I think we're going to 3,000.
That's all you want. Okay.
Yeah, I think we're going to 3,000. I think we're kissing 3,000. I don't know where we go after that, but I think we're going to stick our head above 3,000, sucker in a few more longs, squeeze the hell out of the shorts a bit more. I don't know if we eventually. I think eventually, I wouldn't be sitting with as much cash in my long-term portfolio if I was comfortable in investing. But as a trading, I think we're going over 3,000.
No
Why
trade.
not?
Nothing. No trade. Pulling my hands down. Pulling my.
Boeing get a lift here this morning. BA is getting a lift. It did get some love from RBC. I think they were saying most of the bad news they thought was in the stock, although I still think planes, passengers not flying as much and. I think
overall demand, this is like a broken record. Overall demand, for new planes. Right? There's going to be some consolidation in the industry. They're going to have extra planes. I don't know.
From a fundamental standpoint, it looks like trouble, but I'll tell you, the airline stocks are coming back.
Yep.
Delta's bouncing back. They're all up a little bit here again this morning. They're bouncing a bit. AAL looks like it's ready to break out over 10. That AAL chart looks interesting, Joel. Looks sleepy. Looks like it could get a little bit of a short here.
Yep.
So you know what? I could see Boeing getting to 150 again. I could see it doing it. Maybe today get some love from an analyst there. from RBC. I didn't read the note, but I just saw the headline fly by, and I thought it was to the nature of that they think all the bad news is priced in. I'm not sure about that, like I said. But you know what? It stopped going down. It's consolidated for a few days. Why not squeeze them a bit? I mean, we're buying everything. Why not buy Boeing too? So I could see Boeing go to 150. I don't mind it as a trade here. I'd stop myself out at the 3-day low. It's 125. Holy mackerel! You got to give yourself some room. But I mean, that would be my stop out point. So you got to give yourself $11. That sucks. I'd rather buy pullbacks. I had it this morning. I sold it, or I had it overnight because I kind of like the setup overnight, and I like the RBC note too. But I've already sold it. So.
Speaking of planes, totally off subject here. I told Dennis about it yesterday. But my daughter went up in a helicopter yesterday for Bloomberg, and they hovered over the dam in the area in Midland, Michigan. I don't know if the pictures are out yet, but she called me when she was on the way to the airport. Actually, they are on there. I just pulled it up.
Can we show it, or Bloomberg will probably yell at us?
Oh yeah, they would. Yeah, no. If you go
like
Emily Elconin, Bloomberg, Midland, Michigan, and so she goes, Dad, I'm gonna tell you how I'm gonna take the pictures, and the only thing I'm thinking is that like she's gonna be hanging out of the helicopter, right, and taking the pictures. And I said, "Oh, sure, go ahead, Tom." And she goes, "Oh, there's just going to be no doors on the helicopter."
It's like,
I'm like, "Oh, that's good." I'm like, "Just keep your seatbelt on, okay?" Boy, was I glad.
No doors on the helicopter.
No doors.
No doors.
Get
to the chopper, Billy. Get to the chopper.
Yeah.
You know where that's from? Where's that from?
Billy. I know where that's from.
That's
Billy,
don't say it.
Chopper.
Don't say it. It's from an Arnold movie.
Well, because it's the Arnold voice.
Right. Oh, but which one is the
Which
question?
one?
RoboCop. No, he wasn't in RoboCop.
Nah.
RoboCop.
That's from Commando.
He kills a bunch of people.
Again.
It was a movie that he killed a bunch of people.
Predator. I'm sorry. Predator.
Go.
I'm sorry.
He killed a bunch of people in the movie.
Predator. I was confused.
Yeah. There's a good chance if it's an Arnold movie, he killed a bunch of people. So.
Hey, we're holding support here at 1,000 viewers right now. We did have that breakout day to I believe we got to 1,060. I did not move my offer from 1,000. I did. I moved it up like 1,010, 1,020. I covered that though. I cover it when the show starts because a lot of people can't get out of bed for some reason and be here when the show starts on time. So I did.
So it's those people on the West Coast.
Yeah. They got it
a little
rough.
tougher gig.
Yep. But okay, we got another minute or two here. If there's what else should we check out, Spencer? Someone had mentioned the IWM here. I really don't follow it that closely. One perspective, I'd say, it's been a little bit slower to rebound, so it hasn't taken back half of the move.
Well, it's got all the garbage in it.
Yeah.
I mean, think about the IWN Russell 2000. It's got all these companies that are teetering on bankruptcy too. So it's got, it's not going to do as well, as the indexes that, don't have these companies that are really struggling here. So NASDAQ, obviously a lot of NASDAQ companies have done very, very well. So it's got there's some good companies in there as well, but it's got a lot of companies that are really struggling right now. I'm actually very surprised at the comeback that we've had in the IWM. It's come back a long way. Small caps are starting to show life here. IWM is a play on, when you see the airline starts coming up, you see those ones, IWM is going to do better than the other indexes there because they have a lot of the smaller companies in there and they have a lot of these companies that are really struggling. So I don't know what to say. I own some of these indexes, obviously, a long-term portfolio there. I wish I just owned all NASDAQ, to be honest.
Yeah, that's
I still think the trade is still just long NASDAQ and short everything else. I know that trade's really crowded, though, is the problem. I'd like to see it unwind a bit so I could put it back on. But the biggest position of my long-term portfolio is the Qs. And it's just grown. It's by far the biggest position of my long-term portfolio. I never plan on selling the Qs. I bought them back during the financial crisis. I think I'm averaging at $38 on QQQ, or $38 or $40. So it's no point to ever selling. I wish I wouldn't. This is a story against the covered call rating because I had a huge position in the Qs back then. I sold upside covered calls on some of them. I got called away on some of it. I never rebought it. And I'm like, man, I wish I would have never wrote those calls.
Don't tell the 50 Walmart call story again, please. When you sold the 50 calls in Walmart.
I kept getting called away on that, and eventually it was gone. So
Okay.
I don't write many covered calls anymore. You know why? You take in the financial credit, you take the downside risk. So you get whacked when it goes down, and you limit your upside. So I don't know. If you're a long-term investor, you're a long-term investor. I know in a sideways market, covered calls kick butt, but in an up market, they suck because you get called away on everything. And obviously on a down market, you get heat. You want a sideways market when you're writing covered calls.
All right, well, this is a good segue. I'm going to bring on our next guest here, Dmitry Pargamanik. He's the co-founder of Market Chameleon. They're an options research platform, and they're basically...
Spencer, I'm going to say goodbye to you real quick, all right?
Oh, Joel has to go do his hot mic.
Right?
Yeah.
Guys, join me on
Joel's
hot mic.
Joel's scheduled. 9 o'clock, he's gone.
And I'm late. I got to go.
Joel's
See you guys
now
on hot mic.
All right.
I've got to trade, so I'm going to say hi and bye to Dimitry as well. But I'm going to be listening to you, Dimitry. So we're going to get all. I put you now. I go myself on mute, and I will be listening to you, Dimitry.
Dimitry, good morning.
Awesome. Good morning. Thank you for having me on.
Do you agree with the point about what Dennis was just saying about cover calls in the sideways market? But other than that, not so much.
Yeah, you know what? For some reason, I missed that because I lost connection.
Okay.
I was on there, I lost connection, and I just came back. So I'm sorry about that, but I did.
Never mind. So Dimitry, let's just start high level here about like how have you been approaching, or what have you've been talking to your clients, and what have you been hearing and seeing as far as how people are approaching this market via options right now, like based on your customers?
Sure. Thanks. So we have a lot of customers who approach it a very different way, and some of them stick to a particular strategy they like. But lately, I've been hearing people are taking, as far as options go, like a more defined risk approach, doing like spreads, credit spreads, credit put spreads, iron butterflies, and really people are getting back into like the earnings trade because we have earnings season. So I get a lot of questions around earnings right now. So that's pretty, I think the fear right now is not in there. I don't hear, the fear of we might go back down. That's kind of gone away. And people, I feel most of the questions are more optimistic, how to play like a bullish.
So you did something interesting where you created, I guess, an index of sorts, a way to measure a stock's implied volatility against something, right?
Yes, exactly.
So explain that.
Yeah, and if I could share my screen, I usually, so what I did, because last time what we did was we talked about how to estimate the value of an option, which is very important for traders, because then you could kind of see, how much are you paying relative to the value versus the market prices. So now I wanted to introduce that concept of index and benchmarking, which is really important for traders when you're building financial models and pointing things out. So I did kind of like a quick presentation, because everybody will always ask me, can you please simplify it and put it into terms where I could understand or relate to? So that's what I usually do, and that's why we were talking about it a little bit yesterday. So I wrote it out really quickly, like in a presentation. So is it possible for me to
just right there in the middle, there's that share screen button, and you can bring up whatever you got. So what you're doing essentially is, as far as I understand, is you're comparing a implied volatility against the historical average, or maybe I didn't get that right.
Yeah, well, that's part of it, yes. But here, I'll go through it, because some people might not even quite understand and how to relate that in terms that they might be seen in other places. So yeah, you're right. When we're talking about options, options are also used a lot for strategies, right? You're spreading it off, and you're doing spread, call spreads, put spreads, risk reversals, iron condors, all types of things. So that's what the benchmarks are for, to help you with that. And really, you want to track the cost of that strategy. So what do we mean by like index and benchmarks? So I'll go to a different example. And we know, you probably heard, or most people heard about the Warren Buffett indicator, right? So what he'll do is look at the market cap of the stocks and take a ratio of the GDP, because Stocks, they're not mean reverting, right? Stocks could go up forever. They don't trade around the mean. So you have to create kind of a benchmark to see, are they overvalued, undervalued, relative to something, right? So he'll look at the market cap of the stocks versus the GDP, how much is our economy producing? And if that ratio gets very wide, then that's indicating to him that in general, the stocks are very richly valued. If it goes low, it's kind of indicating to him in general that the stocks might be undervalued. And that's what he's doing, because this just kind of gives him a general indication, right? Not on a specific stock, but stocks in general. So I'll give you another example that people might understand is like in real estate. And what if I created two benchmarks, right? And I'll take a local area like Philadelphia, where I'm from, and let's just say I'm comparing single family homes, the median price, versus rental properties, right? And let's just say today, the median price for single family homes is $125,000. And the rental properties are around 100,000. Well, that's telling me there's like a 25% premium. So what I might want to do is say, well, historically, how does that relationship work? Maybe historically it's around a 10% premium. So that might be telling me that perhaps the single family homes are starting to increase in value. And in my view, I think that these two could be related, because if the single family homes are going up, then the rental properties might be lagging, but eventually those rents in the same neighborhood and those properties, the demand will pick up and it'll revert back to the mean. So that could just give me an indication, or if I'm interested in rental properties, how are they comparing to, the median price of other properties that I think that there's a relationship. So does that kind of make sense?
Yes.
Where I'm going? Right. So then let's get into the options. So how are options priced? Options are priced by implied volatilities. And we look at option prices, we have actually different implied volatilities, depending on the option contract. So we have different implied volatilities on different expirations. We have different implied volatilities on different strikes. So we call that a skew, right? Like the upside implied volatility could trade at a discount relative to the downside implied volatility. But how do we know, today's skew, is it good or bad? How do we measure that? So we kind of need a benchmark. And one thing to, understand when we're trying to compare things, when you're comparing it, the two things have to be related, right? So these two asset prices have to be somehow related, right? You're not going to compare like the price of apples to, the price of t-shirts, right? Somehow they have to be related, just like we were talking about the real estate example, or valuation versus what we can produce, right? So here's an example of what is a skew will come, and then we're going to go look at some examples. Like, so for example, let's say a stock is $100, and I'm looking at the 105 call, 5% above, right? And has implied volatility of 45. And let's say the price of that option is $3. Now I'm going to go down 5% and see what the put is. And let's say the put implied volatility is 55, right? So this relative to the call, it's more richly priced. And the price of that put is $4. So I could see if I sell that put and buy that call, I'll net receive a credit of $1, right? So if I get $1, I divide that by the stock, it's like 1%, right? So I get 1% credit for doing that strategy. Is that a good deal or a bad deal? Well, I don't know. I have to compare it to historical levels. And that's what we're talking about, benchmarking, benchmarking indexes.
Right. So
let's see. Yeah, so let's see how that would look like, right? So
I was going to say, give us a practical example of how this could look and how it could work.
Exactly, right. So here's an SPY, and I just went kind of like the first one is the risk reversal, the one I just showed you, right? This is, if I'm buying an out of the money call, 5% out of the money, 30 days to maturity, selling the 5% put out of the money, 30 days to maturity. Right now, we would receive a credit of negative 0.7%, right? I showed you 1%, this would be 0.7%. and the historical average is 0.5%. So if you go to, you see all these different benchmarks. Remember, we have a lack of benchmarks in general in the options industry. We have the VIX, but the VIX is not going to help you if you're trying to do a spread or a credit put spread in IBM, right? So we don't have those benchmarks, and they're very important because it helps you make a quicker decision, make a quicker comparison. So these are all the different benchmarks for you to reference so you can make that quick decision. Where should I be looking, depending on your outlook, right? So you still might have an outlook, you have bullish or bearish, but this way it gives you an idea where to look, right? So then you have all these different types of benchmarks to look at. So let's just say, okay, we are interested in this one. Let's look a little bit closer at this risk reversal, right? I'll go to the options chain, and here's the options chain, and I went, almost 30 days out. This is 28 days out. How would we put on this trade? So I'm just gonna kind of get it as close to that benchmark that we just talked about, and I'll look up, I'm gonna look up 5% above the strike. So let's just say right here, find this call. So notice that this call right here, the implied volatility is 20, right? 20.1. Then I'm going to go look at the put below. And I'm going to do again, let's say 5%. This one, I'm going to sell this put. Notice it's 28.9, right? So relative to the call,
the IV
put is richly priced. Well, let's see how it compares to the historical levels, right? So this is what I did. I set up buying that call, selling the put. I have a bullish outlook. Let's see what it looks like at expiration. So this is what the graph would look like at expiration. Basically, all this green is where it would be profitable. So since we're getting a credit of $2.31, right? Anywhere here from, this is the spot price. If it anywhere in here, the stock lands there at expiration, we keep that credit. It goes higher. We're making an unlimited gain. It goes below here. This is our loss. So this is what like a risk reversal would look like. So let's see. Now I'm going to go to see historically what this am I getting a good deal or a bad deal? So this is pricing the similar spread, every day historically. It's capturing those implied volatilities and saying on average, you would have received $1.35 credit. Today, it's $2.31, and this is the high low. So you could see how quickly you can make a decision, am I getting a good deal, a bad deal? How does it compare to this?
Got it. So Dimitry, I just want to mention one thing. So this is all great, and I myself am not an options trader, but I still use your site, and I was hoping you can go to the earnings, the historical earnings moves page on whatever stock. It doesn't matter, because that's what that's what I use. Now we're coming out of earnings season, but this is a reference. This is a data point that I've referenced throughout this earnings season and will reference in future earnings seasons is this page that just shows you a historical, going back, like 4 years, historical earnings moves before, immediately after, and then in the days and weeks after an earnings report in a given stock. And I've been using that as reference points for a bunch of earnings reports this season. So I was hoping you could pull it up and we can just look at one. Like, for example, Costco and Salesforce are both next Thursday. Nvidia's today after the close. We can look at Nvidia. That's super relevant.
So I brought up NVIDIA because we talked about, let's look at an earnings play here. And so here's like NVIDIA, and before I even go analyze it, there are certain historical reference points I want to take a look at to see how did it behave in the past. So here on this, I'm just going to look at NVIDIA's. This is a little bit different than the screen you're talking about, but I'll get to that screen that you're talking about as well. But in this is a really quick comparison. How did the options and the stock price do? So here, all I'm doing is taking a look at a graphical representation what you were talking about. This is what the implied volatilities were expecting. This is what the stock actually did. So here it's telling me that 75% of the time historically, the implied volatilities overestimated the move. In other words, those straddles were richly priced. On average, they were estimating a 7.4% move versus 6.8% actual move. So you could see like the long-term averages, if you're playing that, it's about like 0.6% spread. And this shows you how historically if you did option strategy like long straddle, how those performed playing that move. So you see long straddle, it only had a 25% win rate for an average loss of 12%, long strangle, and so on. The other thing is implied volatility crush, right? So here we could go look and say, well, what did the implied volatility usually do after the earnings were announced? So we could take a look at, we look at the 30-day option, and we see here that on average, the implied volatility was down 25% the next day. This was the average volatility before, this is the average volatility after. So it kind of gives us a sense how to set up a trade and how to analyze the current markets. So what you were referencing, so I'm going to go here. And this is what you're referencing over here, right? Right? What did the stock do around earnings, right? Like, what does it usually do around earnings from a historical perspective? So we could see here at the open, it's basically 50-50 if it gaps up or down. Half the time it's up, half the time it's down. And on average, we see that the gaps to the upside were a little bit more than to the downside. So you could see here, that's on average, it's 1.1% to the upside. Also here, after the, and I'm just looking at the video here, I'm not seeing anything unusual. So after the opening, usually it's 50-50 if it goes up as well. So, right. So it doesn't tend really to do that much for an average of negative 0.3%. So here, just looking at the total move, if you have the straddle, if you wait till the end of the day, the absolute average move is usually 6.8% on average versus the opening gap of 6%. So usually what it's telling me is that move stretches throughout the day. So sometimes you'll see a very high gap open and it'll close up.
But looking further out here, it looks like it's way more likely than not to be higher in the 2 days, 3 days, weeks after a report.
Right. So that's what this data is saying, that after the report, usually you see more buying pressure than selling pressure. After the report comes out, people have a time to digest it and analyze it. So we see like coming out 1 day, 2 day, 3 day, 1 week, 2 week. These are all positive average returns. So we see here, 2 days out, 67% of the time we see positive results for an average of 1.5%.
Super valuable, even if you're not trading options, just to know how the stock trades in and around an earnings report. Dimitry, before I'll let you go here, I just want to kind of ask you just about your own trading in the past few months, and just sort of how you've approached this market. It's been a once in a lifetime type of situation that we're in right now. So how have you approached these past couple months? Right.
So at least for me, because and I probably think and trade a lot differently than most people do, but and I've seen these money panics before, and what kind of happens afterwards. So once I see the money, these types of money panics, I don't try to stock pick or pick any individual stocks. I stick to the SPY, and the reason for that is any given stock in this crisis, we don't know what's going on on their balance sheet or whatever that could blow up. It's very difficult. So any given stock could fail, and the government might not bail them out or whatever. But when you go to the SPY, the SPY is not going to go to zero, and that's something that will get bailed out, right? Eventually, they're going to try to hold that market up. So I just stick to the SPY. And one of the reasons also I do that is that SPY kind of has this balancing factor in it. So when one sector is doing bad, it's kind of a stimulative to another sector in the SPY. So for example, oil prices are down, energy is doing bad, but low oil prices is stimulative to a different sector in the SPY, which brings that up. Also, companies that are bad, that are weak in the S&P 500 will get swallowed up by companies that have good balance sheets. So that's an opportunity for them. So for me, I just go to the indexes.
And you're just playing SPY, or are there other indices that you play?
The first thing I go to is the SPY. The other thing that I do is when interest rates go really low, like to zero, and I think that they're going to stay there a lot, I'm going to go look for income producing ETFs, if that makes sense, especially when I know like that's where the Fed is probably going to be stimulative the most. So anything, so I think of it in terms of like this. I do lots of different trades. One of them is a carry trade. And a carry trade is where if I could borrow money at a lower rate and lend it out at a higher rate, make that spread, I would do it, right? So when I look at income producing ETFs, such as like maybe like a well-diversified preferred ETF, like a very well-diversified.
Like PFF, for example.
Like a PFF, exactly. If it drops heavily and I understand the reason for the drop, right? I'll go to it because that's a very leveraged bet. And when you see it in money panic, people are forced to sell it. It's not as liquid as other stocks. I would look at that opportunity and start nibbling there. So those are the types of things, like I'll do the care. And I'm talking about in a money panic situation.
Which we've, I guess, arguably come out of right now.
So,
all right, Dimitry, just any final advice for anyone looking to trade options through this market right now? Volatility has come down a bit, and not to say it will stay here, but just any final pieces, tidbits, nuggets of advice.
So yeah, look, right now we're in a very unusual time, right? We've never had like where the world economies have just closed down their economies, not just in America, it's all over the world. And we don't have any good reference points from a historical perspective. And you could even see some of the best people on Wall Street are warning like we're too high. And I know we're like getting inflated. I know the Fed's like pumping money in there. So we're very high. But because of these extraordinary measures, what I would do is, if you're playing the market, stick to defined risk strategies. Watch those tails. We might be out of it, but I would still watch those tails. If you're going to do puts, stick with put spreads. If you're getting short call, do it with call spreads. But I would really stick with the defined risk strategies, because I think the tail risk here, in my opinion, is still underpriced given the uncertainty going in, 6 months out, 1 year out.
Right. Yeah. All right, Dmitry Pargamanik is the co-founder of Market Chameleon. Dmitry, thanks so much for the time today, and stay safe out there.
Thank you, Spencer. Thanks for having me on the show.
All right. 9:23 here. That'll be a wrap. I'll just pull up a chart of the SPY as we head into the open here. Thanks to both our guests, Dimitry and Scott. Thanks to all of you who joined us in our chat rooms, all three of them. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back at 3:40. In the meantime, everyone have a great rest of your Thursday and stay safe out there.